You were listening to chartingwealth.com for Tuesday, the 12th of July, 2016. Let's talk about where things are. Well, our two-day candle for the 11th of July was a huge up candle, a big green up candle. Actually, when the market started turning around back on our two-day candle on the 29th after the drop following the Brexit on the 27th of June, what did we see happen? Well, the market has continued to move inexorably upwards since then. In fact, the movement today, even with the volatility that we have seen pushed up above the Bollinger Bands as far as the upper wick goes, this last two-day candle, a powerful candle. I do not see back many months a green candle that powerful moving up. What's causing it to move up? Well, free money, I mean, you name it. I mean, as everything else around the world is dragging, again, the market is not controlled by that. The market is controlled by greed and fear. And if you think you can figure out which way the market's going to go based upon corporate earnings, this, that, and the other, you are not being sensible. I almost said you were a fool. I don't want to call anybody a fool, but you're being foolish, let's put it that way, and naive and ignorant, because that is not what pushes the market. Now, you may say, why does the market keep going up, up, up against all reasonable expectations? I would send you to Jeff and Yale Hirsch's book, the 2016 Stock Traders Almanac. It's in every one, and it's called The Presidential Cycle. We are in a presidential election year. The market is going to go up because the market is going to go up. I believe, if I read correctly, 14 out of 16 presidential elections, it's some incredibly high percentage. So what happens, though, after? The market typically crushes down. So keep watching the madness through November and then expect bad things to potentially occur over the next years like 2017, 18. But in the meantime, make money as the market surges. You see the market surging up. If we look, and again, we always start with IYY, which is the total market index fund put out by iShares. We see the 4-hour chart. What's it done? Well, it has moved up the last 2 days strongly on the 8th and then again on the 11th, up strong in the morning, not as strong in the afternoon on Monday, but again, derivative oscillator continuing to heat up, MACD and the signal line not moving toward each other, not converging, so continued up movement. As far as trying to find a point to get in, very difficult with that kind of surging for the last 2 days. If we go back to the 2-day chart, take a look at the S&P 500. For the record, IYY up 0.42% for the day. S&P 500, that was up 0.35% for the day, redrawing a trend line. Again, just strong upward movement. Crossover going up on the 11th, same on the IYY. Derivative oscillator still in the negative on the S&P 500, but looks like it's getting close to moving over with that huge candle. And again, movement on the upper wick above the Bollinger Band, lots of push up as far as our Heikin Ashi candlesticks go. If you look at the 4-hour chart, what do you see? You see that the 4-hour chart has continued to move up. A little bit of a pullback in the afternoon on the 7th of July, and then over the morning and the afternoon, morning and afternoon of the 8th, and then the 11th, continued up movement well above the 2-day trend line. No pullback yet to be able to find an entry point. That movement over the last 2 days, the 8th and then the Monday, the 11th. All right, let's then go back to the 2-day chart. Take a look at the Qs. The Qs up 0.58%, again crossing over, going up. We saw that when we had the confirmed crossover on the 2-day chart, also the derivative oscillator flipped at the same time, usually a better sign for continued up movement. No reason to have a 2-day trend line going down anymore. That makes absolutely no sense. We shall quickly redraw that. And Let's talk about what's actually going on the shorter chart, on the 4-hour chart. And again, the derivative oscillator flipped over. We have seen up movement since the end of the Brexit on the 29th on the Qs, just like on the S&P 500 and the IYY. What do we see going on? Well, crossover back on the 30th in the morning, going up on the Qs. Little bit of a settling down on the 5th of July, and then this continued rocketing up. Since then, no real entry points there, particularly with the confirmed crossover just now occurring on that last 2-day candle. We'll just continue to see if we see any pullbacks and any possibilities of entry points. We don't have them at this time on any of these big charts for the indexes. Now let's look at gold. It was down, as one would expect, 0.91% for the day. We have a 2-day trend line that we're pretty much trying to come through, although the Heikin-Ashi still shows it's a little bit above that. Derivative oscillator has paired its upward movement. The MACD and the signal line still have a lot of distance to close to crossover going down, but gold definitely has had a drag. Again, it's not a red down candle. It's a red open box candle for the last 2-day candle on gold. Let's look intraday and see what we see. Intraday in gold, gold has really been sliding sideways since about the afternoon of the 6th of July, actually pending down. It crossed over going down on the 4-hour chart back on the morning of the 11th, and the derivative oscillator flipped over at the same time and even heated up with its down movement in the afternoon. So we do have a confirmed pullback in gold. If we see gold cross back over on the short chart moving up to parallel the up moves in gold, which are still in an up move on the 2-day chart, there might be an entry point for an upward movement in gold. Let's just see how the week plays itself out. If you've not already listened to our weekly review and forecast, you need to do that to know where the weekly charts are on all these things, and to also know what kind of news moving events we have happening over the course of the week. The Beige Book Eye is going to come out on Wednesday, if that gives you a little bit of a heads up. Folks, that's where we are as we start this week on a Monday. Hope that you had a wonderful weekend. Hope that you're paying attention to these charts, studying them every day. We've been loading up a lot of training information for you, so go take that. Pay attention to those things. Study them. Continue to practice every day. We also have available for you, I'm so happy, we actually have our market worksheet, which allows you to go in there and take notes on the IYY, the S&P 500, the Qs, the NASDAQ 100, of course, IYY is the total market, and gold. It lets you track the weekly, the 2-day, the hourly, candlesticks, the different actions you're seeing, trend lines, the works. It is our pleasure to bring that information to you. And again, we love to hear from you. Follow us on Facebook, Twitter, Instagram, YouTube. Thank you so much. We've had a couple of hundred people at our request subscribe to the YouTube channel. We are now over 700. When we get to 1,000, we will be 1,000 subscribers. We'll be able to start offering you proprietary trainings. And those of you who've subscribed so far, thanks. Those of you who haven't, please do so. That's our YouTube channel, Charting Wealth. Just subscribe. Once we hit 1,000, YouTube requires it. I know we have several thousand listen every week, but we have to have 1,000 subscribers. We can start giving you proprietary information. Also, if you appreciate what we do, go to iTunes. Be sure to subscribe to both the podcasts, the weekly review and forecast, which is in a video format, and of course the daily audio. Give us a 5-star rating. Say something nice about us. It helps us with the metrics. You guys help make us number 7 in the world in stock market podcasts. And we so appreciate that. You made our newest podcast, the video podcast, new and notable. We thank you for all the good things you do for us. We hope you appreciate what we do for you. Show a little bit of love. Thank you so much. Wish you the best from chartingwealth.com.